presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, it's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials down 570, NASDAQ off 190, S&P's off 52, gold contract up $11.30, trading at $17.18 an ounce. You get silver flat, $15.69 an ounce. Light sweet crude off a half a buck, $25.31 a barrel. Notes and bonds. You get the 10-year right now up 9 ticks, trading 139.07. The 30-year up 27 ticks at 180.21. And King Dollar's up 305 ticks, trading 100.238. The euro is out here at 108. The yen is at 107, and the British pound is at 122 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? It's going to be pretty wild watching this shake out, folks, because we're on the cusp of doing a 76-point A to B down. And the bottom line is that you're going to see this when you're right at this curve right now. Right now, you're going into the lows that were generated out here this morning, and on this bar right now, let's see, we're 9 minutes into it. The low that we're establishing that is going after is this is 27.92. You need volume of 74,000 contracts, and right now we have done 62,000. You got approximately a minute left. If we break this bar, if you get down to this 27.92, and the next minute, bottom line is that you'd have a price projection on this of 27.41 in the S&P. So you're talking about a monster number. Now, most times what happens is this. You get down there, you can't break it the first time, particularly when you get that much volume. What we have here, though, is that you are pressing those lows, and you are pressing them with volume. If this 10-minute bar finishes out, and I suspect we get about 30 seconds left in it, and we start out at this area, that's going to be trouble in paradise in a big way. And this little baby just could come into fruition down at those levels. So we'll see how that baby does shake out. Gold contract. What do we have with the gold contract out here? Gold contract right now trading up $11.60. You get 196,000 contracts traded. That's good contract volume, folks. Bottom line, wants higher price in a large way. You get the gold contract. It's in a confirmed ABC structure on the way up, running at the about the 1825. That's where this baby is shaken out. Now, notes and bonds. This is going to get really interesting out here with notes and bonds, and this is why. The note and bond market, folks, okay, normally we get a day like this, we're down over 2.5%, okay? Normally when you get something like that, the bottom line is that the note and bond market would be dramatically higher. Now, what has happened is that they can't catch a bid. You know, we got 1.1 million contracts inside the 10-year, okay? Bottom line is that wants to go higher. You're talking, most times you're going to be doing 2 million contracts. Bottom line, the I suspect what we have happening here is that we do have the Fed in there inside the bond market. And I suspect, other than the Fed, there's not many other folks that are inside that bond market. And more than likely what we'll end up seeing happen is just a slight, small expansion in price higher, expansion in price lower, expansion in yields higher. That's how this seems to be shaken out. And at this particular point, that's what the market actually might be sniffing out. That's an aspect that, guess what? Even though our bottom line at very low rates, folks think they're actually might go negative. The bottom line is that the take is that they're actually going to go higher. And that'll once again put a little kibosh on the equity market. We're going to take a look at the King Dollar out here. What do we have with King Dollar? King Dollar right now, folks, bottom line, rejected lower price out here today. We got a low of 99.577. You're at 100.225, and that's saying that once again the dollar is going to try to get to the top of this consolidation. So the dollar has been in a consolidation going back all of March. And we're in May. 2.5 months. The bottom line, it's been 2.5 months. The top of this consolidation is 109.30, and the bottom of it is 98.270. When we take a look at the market as a whole, what you have out here is that you have increased selling, expanded volume. That is saying the bottom line is that you are basically going to, we got some follow through out here today. If we take a look at the SPY, you're going to see the SPY is making a run into this 290, 279.13, and the expansion of volume is monster. You already got 101 million shares. I suspect what we're going to see out here is that this thing is going to get down to somewhere about 264, 262. Where I'm going with that is the breakout area from the 6th of April. The 6th of April, that, by the way, that'll be just a normal retracement in a market, percentage-wise, that went dramatically higher. The NDX 100, it's fulfilling how the index loves to trade. The bottom line, the index can drag you up, drag you down, drag you sideways. Monsters blowing, volume is blowing out of the NDX 100 in a huge way. NDX looks to me, you're at 217. Differential is that downdraft wouldn't be as bad. 211 would be the number. At 211, you've done 72 million shares. You're at 52 right now. I'm not talking about today, but that's where I suspect we want to go to. And we'll see whether they get that expansion of volume. I expect what we're going to see is that you're going to see big volume come in at the close today, because what you have, we had a major failure at approximately 10:30 this morning. 10:30 this morning, they try to run the NDX 100. They got it going, and boom, there's a seller up there, and that seller just sold right into it in an incredible way. And then, as they say, see ya. Don't want to be ya. Dow Industrials down 597, Nasdaq's off 206, S&P's off 55. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 598. You get the NASDAQ off 207. S&P's off 55. Let's go over to our man, Mr. Steve Rhodes. And don't forget, folks, every trading day, Steve does a great show right here, 12 to 1 Eastern 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, very easy to get Steve's newsletter. You come over to our website at TFNN. You're going to go into newsletters. You hit Mastering Probability. It's right in the center. You can get Mastering Probability for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199, 22%. You can get this for a year for $1195, which is a savings of $593, or 33%. Steve Rhodes, what's going on?
There are several consolidations of important instruments in the market. You were mentioning the U.S. dollar, and bonds have been in a consolidation. I think gold as well. Gold's consolidation looks slightly different than the U.S. dollar and Treasury bonds, but at some point in time, these things are going to crack out here. So what I thought that we could do, Tom, is for the folks out there is just kind of take a look at the general markets overall. As you know, many weeks ago, I was with you doing your segment and showing folks about the relationship between the markets and GDP, the markets and unemployment,
yes,
and all that, suggesting to me that we're going to go back and we're going to crush the, at least with regard to the Dow, in the Russell 2000, we're going to go retest those lows in March, likely bust through them. But whether we do or not at this stage here, let's just start with understanding how market tops actually form. So it's very pertinent to today because of really yesterday afternoon's activity from about 3 or 3:30 on, the selling that was in there. So if we take a look at stock markets, folks, they don't always top at the same time. Many people think that they do. So, for example, if we go back into 2007, what we will find is that the Russell 2000 topped on July 13th, 2007. But it took until October 9th for the S&P and the Dow. That meant that the July high inside the Russell, never got above that, even while the Dow and the S&P were able to do that. Oh, I thought my screen was shared. Shoot. Sorry about that, Tom. That makes it a little bit easier if you can actually see the screen. That makes it a little bit easier. So, folks, here's what we're looking at right here. So what you'll see now, I'm just using closing prices here.
Yeah.
So which is a little bit easier for us to see on these line charts. So what you'll see here is the Russell topped in July of 2007, followed by the S&P and Dow, which topped on October 9th, again on a closing basis. And then we had that final closing high inside the NDX 100. So again, not topping at all the same time. If we fast forward to some more recent times, for example, the high in 2018, in this case here, actually started with the NDX 100. It topped on August 29th, followed by the Russell 2000, which was August 31st of 2018. I guess that was actually that was the second one at the top. And then the S&P on September 20th, and then finally the Dow was the last one to top on October 3rd. If we take a look at the 2020 tops out here, we can see that the Russell 2000 topped on January 16th, followed by the Dow, which was nearly a month later, February 12th, and then the S&P and the NDX 100 were the final ones to top on February the 19th. Now we take a look at where we're at today, the 2020 counter trend patterns, and they're now complete. They completed on yesterday, and I'll go through and show folks the reason why I say that, because so what we had out here was on April 29th, we had the Dow, the S&P, and the NDX 100, and the Russell 2000 each make their highest closing high in this counter trend rally. It wasn't until yesterday, May 11th, when the NDX 100 did. Now, when I use the word top, folks, what I'm really referring to are completed sell signal patterns. So let's go explore those patterns out here. And here we take a look at the S&P 500. What it has is a confirmed Gartley sell pattern. Now, Tom, this green line that you see going across my screen out here, 29.85.93,
yes,
that is what I refer to as breakdown resistance. And how I establish that is I'm looking for, I'm using the Tom DeMark's TD9 system out here, which is taking a look at each candle and comparing it to the candle 4 bars prior, or four candles earlier. And it's comparing the closes of each of those candles. So in this case here, and it takes a lot of energy to have 9 consecutive closes, where in this case here, moving down, where each close was below the close 4 bars earlier. What that does is that helps me to establish a breakdown level. So this Gartley sell pattern formed prior to getting to that breakdown level. And today, what we have is we have price closing below another green line of mine. This one more squiggly out here. I refer to that as Stevie's green line or red line, but it's the oscillator and change line. And what this helps us understand is whether it's just a normal pullback. A pullback is just a retracement to support, because this line will act as support or resistance or something more important than that. So in the S&P 500, I also happen to have a breakout level. So we talked about the breakdown area, and that was at 29.85. The S&P 500 should target the 25.74 level. That was the last place where price had broken out using that TD9 count. 27.66, though, is another area that we want to pay attention to in the ES Mini, and that happens to be the bottom of its monthly profile. And if you go back and you take a look at profile levels, if we get 2 closes below the bottom of a profile, that will indicate a change in trend for us. If we go take a look at other patterns in the marketplace, the Dow, that confirmed a Gartley sell pattern. Folks can see that was also below its breakdown level of 25.994. Now, unlike the S&P 500 that had a breakout area, the Dow doesn't. And so with price trading below my red line level, which was around 23,683 about an hour or two ago, as long as price stays below that and without a support level here, that's where I say price will go back and test those March areas. If we take a look at the Russell 2000, similar to the Dow, this formed a 3 drive to a top pattern. Price below Stevie's red line. Again, no areas of support, no breakout levels of support. And the reasoning for saying that in the case of the Russell 2000 and the Dow, they head back to their March areas. Now, the last pattern, the last indice to top, Tom, was the NDX 100. And just like the Russell 2000, it also generated a 3 drive to a top pattern, something I'm sure that Larry will teach in his upcoming a workshop. I think it's next week or the week after. And here, when we take a look at the NDX 100, folks, what I'll be paying attention to is the NQ, because if the NQ, the NASDAQ futures contract, if it closes below 87.14, that's going to give us a confirmed change in trend. And here we take a look at the NDX 100 pulling back to the 77.63 area. So in our last 30 seconds out here, let's look at the other patterns. And all this is actually fitting right into our seasonal cycle, which typically we see a top around May 19th. Now, we use this as just a general guideline out here with markets moving down into the end of June. But with regard to the rest of the markets, Tom, we've got a Gartley sell in the Dow transports. We have a Gartley sell in the semiconductor index. We've got a 3 drive to a top in the NASDAQ composite. The Wilshire 5000 a Gartley sell. The New York Stock Exchange a Gartley sell. We've got Gartley sell patterns all over the place.
That's a market in harmony, folks. That's the bottom line. Folks, really easy to get Steve's newsletter. Come over to our website at TFNN. You go into newsletters, you can see Mastering Probability. Check it out. It all comes with a 30-day money-back guarantee. Everything to win, 0 to lose. Steve, thanks so much, man. You have a great one, safe one. We look forward to the show tomorrow.
You bet, Tom. Thank you.
Stay right there, folks. Come right back. Dow's up 282. NASDAQ's down 233. S&Ps are up 63. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 658. You get the Nasdaq off 214. S&Ps are off 60. And check this out, folks. And we're talking about this ABC structure on the way down. It's pretty intense. Okay, so we needed 74,000 contracts, 74,934 to be exact. Let me put it up on this side so you can see how this works. It's going to keep building cause to basically get this thing done. You had the expansion of volume, but you didn't get higher than the B point on this. So bottom line, I expect it was going to go for it again because the expansion of volume was so dramatic. So on this bar here, we did 67,400 versus 74,000. So what that means is this, is that when you break the B and you don't break it with volume, your probability gets less that you get the full price projection, because the full price projection on this is 27.41. That being said, what I expect you're going to actually see out here, because it's so early in the day, meaning it's only 3:30, this is going to build more cause to go after this once again. And, we'll see how the baby shakes out. But you certainly have sellers at this particular point. What ends up happening on basically a day like today is that, let me show you this for a second. So when you take a look at the indices in general, because what you had last night, folks, is that bottom line is that you had the S&P run into the close of yesterday. You got to a lower low last night, early last night. That was at about 8 o'clock at night, okay? Then you start going higher basically all night. And at 8 o'clock in the morning, you were up there somewhere about the highs in the marketplace out here, about 28.76. Now, when you get something like that, and then the market opened, and then you start accelerating higher when the market opened. So watch what happened here. The market basically got opened at 28.32. We went up to 28.76. So that is a scenario when, folks buy the dip. They've been doing well buying the dip. Bottom line, they got that going, and then you gave it up in spades. When that happens, what happens coming into the close is that they had all day long to get into the positive. They hadn't. So you're going to see more selling when the closer that we get to 4 o'clock. That's how that normally shakes out, because of that bump up, particularly that bump up inside of the Nasdaq S&P futures, the NDX 100, because the expansion, was fast, was furious, okay, all of the above. You can see this. The bottom line is that when we opened the markets up, the NDX 100 was at 9,042. Well, the NDX 100, folks, ran all the way up to, they ran up 100 points. And then just gave it up in spades. So the folks that are up at those levels, because the volatility in the marketplace, there's no doubt. There's been great volatility in the marketplace. And when you're talking like at the very beginning of the marketplace out here, we were only talking about 50. Well, we're talking about 50 S&P points. Well, the range out here today, folks, has been 100 S&P points. The high is 28.76. The low is 27.86. 90. So it's 90 S&P points. It's a big number. So we'll basically see how this baby is shaking out. But bottom line, I expect the volatility is going to stay out here in spades. We get inside the Dow Industrials, and let's take a look at the strength versus the weakness inside the Dow Industrials. Right now, you only have one equity that's positive, and that's Merck. That's putting 2 positive points into it. Taken away from it, you have United Health putting 71 negative points. We get Apple putting 41, 3M putting 40, Goldman Sachs 37, American Express 36. We go inside the NDX 100, where you're going to see the strength versus the weakness inside the NDX. Regeneron's up 2.9%. You get Zoom up 2.6%. NetEase is up 2.6%. And Liberty's up 2.3%. Taken away from it, you got a few disasters out here. The first one being United, down 9.5%. You get Ultrasalon off 7.5%. Cognizant Technologies off 7%, and you get an NXPI off 6%. Now let's get over to United and take a look at United. So bottom line, these airlines no doubt had got a pop. It was a decent pop. when you take a look at just percentage-wise, it went from $17, you got it all the way up to $39. This is barreling down, folks. This is going right after the lows that were established out here on the 18th of March. That low, folks, is $17.80. And if we break that low, you have a United that's going to go BK. That's how this is setting up. And it's going to be really intriguing watching the whole airline deal shake out, because we know that, number one, that they absolutely got funded. But when you get funded and you have no one getting on the planes, it's a big difference. And, the bottom line is that the differential inside the airline business is that the airline business, folks, was never shut down. So people are not getting on planes because they don't want to get on planes, okay? That is a big number, man. I mean, the real question is going to be, how do you get them back on planes? How do you keep them safe? And in United's case, United has already got some bad publicity if you're actually thinking of getting on a plane, because what you had out here, not yesterday, the prior 2 days ago, is that you had planes and they were full, because what has happened is that they've cut back so dramatically. The airlines have never promised anyone that, guess what, you're going to have a private jet. But prior to like 2 weeks ago, we saw plenty of pictures that you get 727s flying around, 737s flying around, and you get one or two people on them. Well, 2 days ago, there were plenty of pictures of United Airlines flying around totally full. And, the bottom line is that, as I said a little bit earlier, there's no promise that the bottom line, you're not going to be on a full plane and a cattle car. And I suspect right away that takes people south in a big way, because we know that airlines in general, you bring in that air going around, it's like, okay, do I really want to get on a plane? We'll see. The transportation business, the oil business, rig. We take a look at rig. This is a rig, bottom line, folks, okay? My take is this is going to end up going BK. Diamond Offshore already went BK. Sad story, there's no doubt about this. Rig today down 34 cents, trading 135. You get a high volume swing low out here at 76 cents. My take is that it's going after it. Their business operations in general, they're not needed. There is so much oil between Diamond Offshore and Rig. They were both rig companies, meaning big rigs offshore, that when oil was going up dramatically, there's a huge amount of oil offshore, but those rigs are so expensive on a daily basis, folks, okay, that the amount of oil that is very easy to reach, that we're not using, that is what you're seeing inside of that business. So I suspect it's just a matter of when, not if those babies end up going south. We're going to take a look at the oil market itself. What we had out here today is that we had the oil numbers come out, and the oil numbers, folks, okay, the bottom line is that you had the market was looking for approximately 4 million barrels coming online. Well, it was just the opposite. You had a drawdown, okay, of 745,000. And guess what? You still couldn't catch a bid. Oil still sold off. So what does that mean, folks? That means that we have a boatload, literally, of oil, and boatloads of oil across the world. Stay right there. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow down to 604 right now. We have the NASDAQ off 183. S&Ps are off 51. After the close out here, folks, you're going to have Cisco come out with numbers. Cisco right now is trading down $1.50 or $41.63. And bottom line is that I suspect what we're going to see here is that Cisco is going to go after this lowest swing point, because you got some juice coming out of here. Cisco, made a high yesterday with 25 million. You're going into 48 million. You do 25 million on the way down. This baby looks like it wants to run it somewhere. It's like 38. Right now, you're at 41. Let's go to Steve in Nashville. Hey, Steve, what's going on?
Hey, Tom, I have your large black coffee here for you, the Dunkin' Donuts.
Hey, man, how you been?
Good. Hey, that was me with the emails about INSG. Sorry about all those.
Oh, no, that was cool, man. Yeah. Totally.
Yeah, I said I'd just call in, but actually I'm calling about X, U.S. Steel, I think it is.
Okay, so let's take a look at it again. U.S. Steel, lows 454, the high's 1590. Okay, so what are we doing?
I'm not in it, but what is a month, 3 months back or so? What was it, around 25, 30 or something like that? I'm not in front of the computer, sorry.
Yeah, that's all right. So let's take a look at it. So you got, 6 months ago it's trading at $14. 2 months ago it was trading at $4.55. If you this equity, is doing a slow death, man. If you're gonna get into it, I'd get into it somewhere like 550. As long as this.
Right.
So your last low out here was 454. The one sign that actually does something out here was the day of was actually the week of the first week of April. What you have here, however, though, and this is a heavy scene, Steve, okay, when we're talking here, meaning that this equity, and this is really important to understand, folks, when you get these downdrafts and then you get a nice bounce coming off it, and that bounce cannot take out a swing point, which this hasn't done in years.
Right.
Okay? That is an equity that's primed to go BK. So
gotcha.
It's really important to understand, because you can see every single one of these. Look at this. I can take this. Is pretty sick, actually. I just took this all the way back to March of 2018, it didn't take a swing point out. Let me see if I can get it back further. This is weird, man. But there it is. So it started. It hasn't taken out a swing point since March of 2018, which is pretty intense, man. So.
Yes, it is. Yeah, well, thank you very much for that. And I will call again very soon.
Okay, brother. Have a great one, man. Have a safe one.
You too. You too.
Let's go to Jose in Lakeland. Hey, Jose, what's going on?
Hey, Tom, just checking in. Tom, can we give Royal Gold a COVID-19 test? Because it's looking sick, like it wants to expire. It was this morning anyway. It went to 125.35. Is that what it needed to do? Because it was ugly yesterday and this morning.
So let's take a look. So you got Royal Gold. The bottom line is that you're at 128.27. You want to see this close today, which it looks like it's going to be really, it looks like it's going to be close. You need this to close over 128.01. And where I'm going with that, Jose, is this. The sign of strength, folks, this is one of the strongest gold stocks there are. This went topside on the 7th of May. The low there is 128.01. You had 1 million shares traded. You backed into this today. Now, it rejected that lower price today. You just need that rejection going right into the close, meaning the 128. If that's what you get, the bottom line is that this just needs some more cause in order to get to higher price. That's how this shakes out. So.
All right. Well, I'm looking at it come back here. I feel in my bones gold wants to rally here because Newmont is up pretty good.
Yeah.
These miners, I don't know what they all are. I only look at these three, but as a whole, I don't know what they're doing. But Newmont looks like Barrington Gold, or what is it?
Barrick Gold. No, Barrick, yeah.
It's not the strongest, like you said. It's
right.
But look, is this move to 1820, 1840 on gold? Is this imminent? Like Jesus Christ return? Are we going to get it soon?
That's a tough one, man. Okay, and what I've found is this, though. This is what I have found. And what Jose's talking about, folks, is this. And there's no doubt. This gold market, okay, we had a nice break topside going all the way back to April 7th. Well, we're at May 13th, right? And, you really haven't had much movement, but that's what drives everyone crazy. What has happened, every time that you're running into higher price, you get volume on it, you pull down, it's rejecting. So that's telling me that we still got that ABC structure in place. And most times what ends up happening is that as long as a structure can drive everyone out of their minds, that's when you actually get what you need, whether that's an upswing or a downswing. So...
Yeah. It looks like the miners are front-running the gold here, but I hope that's the case.
Well, they are.
Tom, just a little prediction. You ain't keeping people in this summer. You're going to get a spike in numbers, and then you're going to get stimulus checks all year, and gold's going to rally.
The real question is going to be that about that stimulus checks all year, because my take right now, and this is just a fundamental take, folks, is that between the unemployment and the stimulus checks, that's going to be over, July 31st. And it's going to be like, okay, so what's going to happen after that? And, it's a toss-up.
Tom, it's a Band-Aid on a gaping wound is what it is.
It's pretty intense, man. I mean, for the amount of folks that have lost their jobs, it's pretty intense, man. And the real question is, how many of these places are going to open back up? And how, it's going to be like, what are we going to do? Because when I was just talking about the airlines, well, the airlines didn't close down. We decided we're not going on a plane.
Look, over the years, I've heard you say many times, go down to Main Street and support your local market, your local produce, your local market.
For sure.
If those places are closed, boy, you've got to see bankruptcies skyrocketing over the next year.
Right, and then people's cash flow. What happens there? So,
oh boy.
Hey, we get it. We'll see how this baby shakes out. Have a great one, man. Have a safe one.
Thank you.
877-927-6648. Let's go take a look at that E-mini. So you're up at 2807. And what you're going to be looking for now, folks, when you're really bisecting and dissecting markets like this, what we're going to be looking for is that, do you have any juice on the way up? Because we've been in this little consolidation. See, we've been in this consolidation down the lows since noontime today, folks. So when you're taking a look at this, right now you're 9 minutes into this bar. the bar is a decent bar. There's no two ways about that. This bar is running out at 50,000 contracts. But that being said, you are going into 74,000 contracts. So the 74,000 contract level is your level for the top of the consolidation, which is 28.19, as well as the bottom, which is that 28.01. And that's where that whole ABC structure is. So as we get up into that level, the real question is going to be, do you have enough to basically bust that level and to get higher? And we'll find out. The bottom line is that, we only get 10 minutes to 4 o'clock. You get 25 minutes to the close. Dow Industrials down 534. Nasdaq's off 151. S&Ps are off 41. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is down 508. You get the Nasdaq off 142. S&Ps are off 40. And the number to keep your eye on that S&P, folks, is 2819. We're at 2813 right now. It doesn't look that you're going to get these the volume characteristic into it. It doesn't even look like you're going to get the price. Right now, you're at... Well, it could get the volume. You're at 41,000. You're talking 74,000 is the number, and 2819 is the number. That's the top of this range that we've been in since noon today. So we'll see if that shakes out. That is on your ABC structure on the way down to where the S&P is. When we take a look at the SPY, the bottom line is that you have lower price, you have a monster expansion in volume, so you're going after this. In fact, you broke it. You broke the 279.13 area. That 279.13 area is your swing. You broke that with 80 million, with 122 million shares versus 80. That is basically setting up much lower prices. 275, 267. That's where this baby looks like it wants to go to. If we look at the NDX 100, you're going to see the same type of setup inside the NDX. NDX out here, down 60 million shares. That doesn't have a lower swing. Well, it has a lower swing, but it's a lot lower than we were. But you can picture that yesterday when it went higher with 41 million, you're down in 60. They're going to throw a bunch of volume in this also at the lows, and so because of the NDX 100 taking such an extreme move forward, I mean, the bottom line is that the NDX traded all the way up to the $230, which was the February 6th high. So market participants had a whole nother shot to get out of everything that they were into, and I know that's very tough to do, but what I've found is that most times markets, folks, even that are going tremendously lower, most times give you at least 2 shots, sometimes 3 shots to get out of the market before the baby ever even comes back. So pretty amazing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step inside it, take ownership of it, and fly with it. Everything we need is right inside us, folks. Come join us again tomorrow morning, 8:30. Tommy kicks us off. Great show. Have a great one, folks.